Okay, hi guys, how are you? This one is gonna be a quick session. Remember, I promised you that I will be doing with you some live sessions. So I want you to remember one thing here. Me, I'm not going to teach you from scratch what is ICT, blah blah blah. You see, that one is your job. My job is to make sure that you understand how to use ICT and how to make money using the ICT strategy. That is my only job here. So I will be giving you some brief explanations, some insights of how you can trade using the ICT and pointing you exactly where you should be looking at when you look at the chart. So the first thing I'm going to, for today, I'm going to teach you this simple setup that you have been all hoping to see when you are trading ICT. So the first thing is this one. You must always follow the US dollar index and see its direction on high time frame. If you don't see that one, never mind. You can just do some quick trades on GBP/USD, Euro/USD. So this setup that I'm going to show you, the ICT setup, applies mainly on London Open and New York Open. On those Q zones, that's where you must trade. Out of those Q zones, please don't open trades unless if you are willing to take a gamble. If you want to trade outside the Q zones or on other pairs besides GBP/USD and Euro/USD and other pairs, then you can apply it on higher time frame, let's say H4, the 4-hour time frame, the daily chart. Then you can trade that one as a swing. Okay, so here's the thing. The first thing that you must look for, suppose this is a chart like this, right? If a chart moves from this top coming down like this, now you must wait for it to breach the sell stops here. The moment it breaks this sell stop here, wait it for to leave an order block. It breaks the market structure, then it comes and retrade the order block. Then when it trades this order block here, it will move and come and raid these buy stops. This is the number one setup that you guys have been looking for, but you were not able to detect it correctly. All right, so what are the specifications? Rule number one, it must chop these sell stops, right? If it is a buy, that is number one here. So the confirmation number one, it must hit the sell stop. Number two, it must create an order block and trade above that order block. When they pass the order block going up, that is your confirmation number two, right? Number three, it must come back to trade that order block here. And this is the most important. It must be within the Q zone. It can be Asian Open, right? It can be London Open. It can be New York Open. This one, number three, must happen in these three Q zone, or you can use the London close or whatsoever. But me, I prefer the London Open and the New York Open. Those are the ones that I trade most, especially the London Open on GBP/USD. It gives me nice setups of this criteria. Once you trade here, look an immediate high that will be inside here. That will be your take profit number one. That is where you can scale out, or the nearest order block, the nearest fair value, etc. That's where you can quickly scale out. But normally, initially, once you load here, they'll be looking for the nearest equal highs. That will be on the other side. Okay, let us go to the chart and I'll show you some examples right now. Let me create a new share. Then I go to the screen, right? Okay, it's fine. Okay, this is the dollar index. So if you want to understand the dollar index and see where it will go, you can see from this point here, we have got these sell stops here that have been chopped, right? Then when these sell stops have been chopped, price rallies up, going where trading above this order block here. You can see in the mean threshold here. So when they come, So this is your confirmation number 1. Then this one is number 2. Then you wait for them to come and trade here, and then boom, it goes all the way up and go and target these equal highs here on top here. You see, once they do that, remember, once they read the sell stops, they are going for the buy stops. After the buy stops, they'll be now looking to do the same. So they pass, go down. So this one now, it becomes our confirmation number 1 for our sell. And then here you can see this is our order block. This is number 2. Then they come and retrade it here. This is number 3. Then from there, it fires all the way down, chopping out this one. If you are trading this point here in a sell stop, in a sell trade, this is where you scale out your first profits. Then from there, you'll be now hoping that it will come down to take out these levels here. This is the simple setup. Let me show you with some examples. I'm sure we took a trade. Let me check. Where was it? Okay, let me clear all the drawings here. Fine here. Let me just do like this. Okay. To show you some of the examples that I've been taking before, so that you can understand the whole criteria of this strategy. It works very well. If you use it very nicely, you will find that you get almost like 90% of your trades will be hitting the take profit. Okay, as you can see here, we took out our sell stops here, price rallies down, right? From there, it creates this order block, didn't manage to trade above it, then it creates this one, they trade above it. If you were trading, this is the time when they come and retrade it, but because it was outside the session, the Q zone, you wait. So here you can see this was the Asian open, it traded this order block. Then London was here, they leave this reclaim block here, which they trade above it, and they come and retrade it for a New York open, and then boom, they run all the way to take the buy side liquidity, right? Let me go for another one. You can see here again. Let me annotate. Right, you can see they cleared the sell stops on this level here. Then they run down. Then they create this order block and they trade it above. This is the order block before they start to rally. So normally a lot of people will ask you, why did you use this order block and not this one? Normally you use the last order block, which they before they rally going up. That is the most important order block, and which is also close to a Q zone. Most of the time, if I have an order block here and then New York opens here or London, I use the one which is so close to our Q zone. So you can see then they rally up, which means they trade this order block. So we're waiting for them to what? To come in London open, they come and hit. You can see how they respect the mean threshold. So if you are trading, this is where you'll be putting your stop loss. Then from this point here, boom, all the way, they'll be now coming to trade these buy stops. All right. Let me look for another example here. All right, you can see this is another example. We had some buy side liquidity here, which was now chopped. After that, price leave this order block and then it starts to go down. When they start to rally down like this, don't worry. Just know that if they move before the Q zone, just know that they will come back. They will definitely come back to trade this or be here. Then they come in Asian open, boom, they hit this order block, then they start to go. And I'm sure this was when London opens around this time here, when they come to hit again this order block. So if you're anchoring your fib, maybe you want to trade the OTC, you don't use this high. Once this order block has been traded, and it starts to move like this, and we have a London open here, use this order block here close to London open, anchor your fib from here to here. That's where you get your perfect OTE. So if you have been asking a question on how to use this order block, or which order block to use, this one or this one, I'm sure I've answered this question for you. Use the one closest to your Q zone. You see, so you anchor if you here, you get your OT, then boom, we run down all the way to target this sell stop. You can see that here, this was when New York was opening. New York again, when New York was open, you can't anchor the fib from these ones now in a New York open to anchor here and here so that you can get a re-entry. You use this one here. This is the nearest order block close to New York open. You anchor your fibs, here, you get your OTE. Then you can now get your entry to come and chop out the guys here. You can even measure 10 to 20 pips. This is now, it will be now clear for you when you are trading this kind of setup, right? Then we can go again and check some more trades. I'm sure this one I gave you, it was on a daily chart. It was Thursday or Friday. Okay, you can see it is the same setup again. They chopped this buy these sell stops here. Sorry, I said buy stops. This was sell stops. Then they cleared them. After that, they trade above this OB here. So this one becomes our order block. The moment they trade above it, which is a market structure shift, it becomes valid now that we can now reference on it. So the market comes and retrade this OB here. You can see how they respect the order block. And again, we're having this swing low. And you know our rule that when we have a swing low like this on a daily chart, remember the next candle that will come here, it will trade above the previous high, or 1, 2, 3 of these candles here. It has to trade, especially the previous day, they will trade above it. But for them now to confirm that they want to go up, they must open, go low, and then they chop this high, and then they close. That is the ICT power of 3, which is the one I indicated that it has been applied here. When they open here and starts to drop down, coming to trade this OP here, and then from there we mark that they are targeting this previous day high target, and then boom, they go. But the same thing happens again when they come to trade this order block here and going up. So our initial target was these highs here, this one and this one. So expect that even this coming week, we'll be trying to trade above these highs, entering into this OB here. So that is on GBP USD. So you can see that it is the same setup again that we have been that I've been showing you. The simplest setup that if you apply it yourself, even on your charts, you will see that it's automatic. You are going to hit a profit. This is the starting point that you must always make sure you take into consideration. Again, the same thing. It keeps on repeating and repeating. You can see here, right? So I didn't mark it nicely. You can see we have got these sell stops here, right? Price rallies down. After rallying down, it leaves this order block here. It starts to go up. It trades above it, right? So the moment it trades above it, check here. They'll come back for it in the mean threshold. Look how they respect the mean threshold. So if you miss the entry here, you got it here, then boom, it go. But the next day now it comes, you have another London session. So because you now have the London session the next day, you can no longer go and reference this candle here because already it has been used. So you use the order block which is close to London session, which is this order block here, the one that you use. Then you target these highs so that you can go and complete the mission that you didn't complete yesterday from that chart. I'm sure it will show you how it ended in this trade here. All right, you can see again, these are the buy stops chopped above here. Once they chop it, it's fine. They go up again, it's fine. Then they leave what? This. Now this one, it becomes what you all know, a mitigation, right? You can apply the mitigation here. If you anchor your fibs from this point to this point, you can even get an OTE, but the best one is the mitigation block here. Then you get your entries here, boom, straight to red what? The sell side liquidity, boom. Simple thing. It repeats and repeats. Same thing again, bam, it takes the buy stops, go again, it informs you this mitigation, boom, same thing, right? All right, you can see here, another same thing, it goes up, trade this order block here. So whenever you trade, you must also give, this is where Michael Huddleston, our best preacher in Forex trading, Apostle Paul, tells that whenever you take this trade, when you are putting stop loss, yes, initially we must put a stop loss here, but you must put at least give space for spread, 3 pips, 5 pips above, just to avoid scenarios like this where they come near your stop loss. Then boom, it goes straight to take out these sell stops here, right? Another example here, we took our sell side, liquidity pool cleared, okay, gone down, they leave this OB, they trade above it. This is what this lines demarcates to show you that we are in London open. Then it come and retrade this order block here. The moment they retrade, this is your point. You trigger your trade, put your stop loss down there. Look how it all rushes down to take the buy side liquidity. Same thing. Again, you can see buy stop cleared, they go up, then they come back and retrade again here. You see where I put the arrow here, that this is where you enter. Then immediately when they've done that, you know where are they targeting. They're just targeting the sell stops going all the way down. It will be the same thing always. This was the time when I was taking that trade before I screenshot it. So these are some of the examples that I've shown to you. If you go to Michael Huddleston, our best preacher in Forex trading, Apostle Paul, you can see this is something that he have been using for a long time. Go on his charts if you have all his screenshots. This is from Michael Huddleston himself. You can learn it and see it yourself, right? Let me just explain. The only thing that he did is that he didn't show you to mark you, to explain to you that what is happening, because it's something that he has been hiding for people. You can see he marks these sell stops here, that these sell stops have been cleared. Longs are institution now. So look what happens here. He just marked this box. He didn't explain to you what is happening in this box. So this is what is happening in this box. Let me mark it for you. You can see the mean threshold has been respected of this order block. They've traded above. They come and trade it. Then you can trigger your trade here. You get the point. Once you trade the trigger here, buy side liquidity pool is where you'll be now targeting. Okay. Again, now this one comes in New York, right? Look what is happening. He marks these 2 points here. He's trying to indicate, to show you that these are sell stops have been cleared. Once they are cleared, sell stop clears, longs are institutions now. But why he didn't enter here and wait here? Because whenever you hit this sell stop, you must wait for an order block. This is the order block here. You wait for them to come and trade this order block. So the moment they hit this order block here, this is when he enters. He triggers this trade now. So he targets where we've got buy stop liquidity here. This is the first point where you'll be now scaling out. Then you have got what? The initial target here. It is there on his charts. He shows you each and every time. Just that a lot of people, they do not understand our Apostle Paul clearly the way we managed to decode it. So let me try to look for you some of his screenshots again, so that maybe I can show you some more examples. Let me check this one again. Let me check. Okay, this one was from Michael Huddleston again. This, I downloaded them from Twitter long time before he deletes his Twitter account. You can check here. You see, the market from the previous side, he took out this one, the lows, and leave this OB and trade above. So him, he doesn't care if the market goes up or whatsoever. He wait for what? That is why he marked London open. You wait for it to come and trade this one. So this is where you trigger. And then now, when we go into New York, look what happens. He wait for them, because here you can see, this is the part, interesting part. You can see here. It chops these lows, then it goes up. The moment it comes back to trade this order block here, and look, he marked for you that this is a New York open. It comes and hit this New York open, and then boom, you target here, you target whatever you'll be targeting on top. So here I'm trying to show you what you have been not being explained, something that was not being explained in his charts or whatsoever that he has been showing you. Same thing, guys. You can see Papa, it goes up, chops this side, it goes down, sells again, then it comes and retrade. This is the OTE. Once it trades here, it goes down and chop the lows. Something that you have to experience every day. You can see we are in London. This is what is New York. This one, New York opening. He didn't pull the fibs like what I told you. He didn't pull the fibs using this high or this high or this high. Just look where the market rallies away from the order block in that session or next to. So this is the high. That's why he anchors his fib here and this fib here and come into OTE to get his trade. So you must know where to anchor your fibs. Did I check something nicely here? Something again that explains also the issue of anchoring your fib. You can see here, he could have used this low here to anchor your fibs, but he chose this one because this one is the closest OB before the market rallies up inside, next to Asian, next to London, and then market comes and trade what? Here, chopping this OB and clearing this sell stops here, and then boom, market goes up. Then again, market comes down again, chopping these sell stops but trading to this OB here. You enter your trade here in New York, boom, you go and target this one. So I'm sure I've shown you something that you must always consider. Yes, you can see here, this is our New York, this is our London open, right? Now check the issue. I want you to see again this issue of the OB. So this is where the market rallies before what? Before London. So we are going to anchor our fibs here. Not here, not here, not here. This is where the market starts to rally before we enter into this London. So we are going to use this one. That's why he anchors his fibs here and here so that he can get the OTE straight into this block here, and then boom, targeting our sell stops. So these are the things that you must always put into consideration whenever you are trading ICT. Try to start as many screenshots, as many things that he sends to you. You must try to decode them and see what is really happening there. I'm sure this one we explained it. I'm sure there's another one. Let me try to look for that one. This is the same thing that is happening here. I've explained everything here. Let me look. Yes, another one here. Same thing. Let me explain it nicely so that you can understand. Okay, you can see here. This is our apostle Paul. He took this trade right here. Why? He waited for them. This is why he marked this chart, this line. The reason why he marked this line, he cannot explain to you, is to indicate that the stops have been taken here. Right? Then after the stops have been taken, like with this candle, so this candle becomes what? Our OB. So he waited. He knew that the market will go down, but he waited. Look here, he waited for them to what? To trade the low of this candlestick. So the moment they move up and trade the mean threshold here, this is where he triggers his trade. Because they are trading back to this OB here. It becomes an OB. So it's 3 out of 3 checks. So you put your stop loss here, then boom. From here, look where he is targeting. He's targeting this low here, but first he scale out something here. Why? Because this is the first low. This is where you scale out something out, then boom, it goes all down to target this sell stop. It's right there in your eyes. You must just try to search for it. Whenever he posts a chart, take your time. You see these things always. Same thing always, same thing always. Let me try to look for you. It is the same thing always, guys. You will see that once he pulls out these fibs, it's same thing that is just showing us from low to high. There's another one that I'm looking for you. It's the same thing like this one. You can see that here they've chopped these lows here, then they leave this OB here, then they roll above. The moment they roll above, and remember we are in where? New York. That's why he marked this zone here. And then the market comes back to trade down where? This OB here. So the moment they trade it, boom, that is where you take your trade, this zone. That's why he marked this zone and this one. So you can use them with the OB, or you can use the fibs to mark from this point to this point you mark, then boom. But just before you anchor your fibs here, you must have at least sell stops taken down with an OB, it, those three checks, then you'll be 100% correct. Trust me on this one. I've been using it for a long time, this one. And I will show you as many as you want these examples. Check whenever he took a trade and look, it has got footprints everywhere. Here, sure, it's not gonna be right. I didn't want this to be long. You can see these are the buy stops taken out, trading to where? Into this OB here. This OB, why he marked here, he didn't explain to you that that is Apostle Paul. He wants you to see it for yourself. He's saying, put your feet from here and here. You anchor from here and here. Because this one is the last OB before the market rallies down when we are entering into what? This is the London Open, this one. You can see here. So he's telling you, anchor your feet from here to here. Then boom, you get what? Your 8 OTE. That is why he triggers here. But this OTE, if you check, it takes out the buy stops here and entering to this OB here. Then you take, which is what? Bearish ICT breaker. Then boom, you are going down, all the way down. That is how you see your fib. So check the checks, buy stops taken out, trading into OB, which is OTE, and we are where? In London Open. Boom, you get your straight ICT sell model whatsoever, you get it there. Let me try to, it's the one that I was trying to look for you. This them here I've shown you. I don't know, where is it? If I get it, I will show you. If I get it, I will show you in another session, and then I will post it to you. Okay, you can see, right? Again, this is the same thing that he always does. That is Apostle Paul. You can check here, right? The sell stops have been taken. This is the sell stops here, right? Price rallies down, sell stops rated. Because here we are on a on H4 chart. This drop down here from this point here to this point here. We're coming to trade into OB, and then from there we are going where? Here to target here. He shows you. Then once you take this one, you expect them to go where? Down and trade what? This OB. So which will be expecting to be what? New York. Once they do that, is reaccumulating, then they fires up to target this zone here. Those are the things that you must always consider. So I'm sure I've explained something here. If you have questions regarding on this one, don't hesitate to contact me. Just contact me. You give me the question, mark your examples. After you mark your example, send to me. If you don't want to send to me, it's fine, but you can start it. Then once you get a trade it. Don't just mark and just say, I'm going to look. Trade it to experience it, how it moves, how it is to put some fear into you, some things like that. The only way to win this game is to trade it. Then once you trade it, I'm telling you, you'll see some very big change in your trading career. So thanks a lot, guys. I will do also another one, but make sure that this one you master it first. These things you can find them, whatever I've explained here. Go and watch the ICT mentorship month month 1, right? Video number 2, and month 2, video number 2. No, this one is video number 1 here. Yes, so it's month 1, video number 1, and month 2, video number 2. Watch those videos. These ones, they are very important. Don't forget about that. Those are what they call the charter material. What? Forget about them. For now, what you need is money, and this is money. Because what you need right now is to go in chat and see what is happening on the chat. Then you trade it and make money. These two videos, they can pay your bills, whatever you want. This one, we will go on and add some stuff, but this is the best. These 2 videos, month 1, video number 1, month 2, video number 2. You thank me later, guys. Watch those videos, study them nicely. Go on every screenshot that have been sent by Huddlestone. Go on every video that have been sent by Huddlestone, like taking a trade, etc. Check if you don't see these 2 things that I've been explaining to you here. Then you'll see. Thanks a lot.